Welcome to the Daily Market Recap. Today is Wednesday, July 15, 2026. And what a wild seesaw day it was on Wall Street. The major indices pulled off a solid green finish after flipping between modest gains and losses all session long. The tech-heavy NASDAQ Composite led the charge, climbing 4.06%, while the S&P 500 added 0.4% and the Dow rose 0.3%. The main catalyst keeping the bulls in control? A surprisingly cool producer price index report showing a 0.3% deflationary drop in headline June wholesale prices. This welcomed relief on the inflation front gave the market the perfect fundamental fuel to completely shrug off escalating Middle East geopolitical jitters. Looking at the sectors, financial heavyweights absolutely flexed their muscles today. Earnings season is officially underway, and blowout profit reports from the likes of BlackRock and Morgan Stanley provided a massive tailwind across the entire sector. Technology and semiconductor stocks also enjoyed a much-needed bounce back, finding relief after facing some brutal selling pressure earlier in the week. On the flip side, the energy sector was a complete roller coaster, with crude oil benchmarks swinging wildly near one-month highs as traders nervously monitored evolving naval tensions near the critical Strait of Hormuz. Even with today's green close across the major averages, investors aren't completely letting their guards down just yet. The greed and fear index locked in at a balanced 46 today. This places the market sentiment squarely in neutral territory, showing that while the wholesale inflation relief is incredibly sweet, the dark clouds of geopolitical conflict are keeping everyone's inner bull cautiously restrained. The clear heavyweight story dominating the financial headlines today comes straight from the world's largest asset manager. BlackRock dropped a monster second quarter earnings report, revealing that its total assets under management have skyrocketed to a record-shattering $15.3 trillion. Buoyant market conditions and massive institutional demand for ETFs drove a staggering $192 billion in fresh net inflows. This blowout performance didn't just push BlackRock stock higher, it injected an enormous wave of fundamental optimism across Wall Street, proving institutional money is still actively pouring into the market. Our runner-up story centers on the macroeconomic front, where the bears just lost a major piece of leverage. The June Producer Price Index showed an unexpected headline deflationary print, dropping 0.3% month over month against expectations of holding completely flat. While the core PPI numbers came in slightly stickier, with a 0.2% monthly rise, the overarching narrative is that pipeline wholesale inflation pressures are visibly easing. Futures markets immediately reacted by trimming hawkish rate expectations, giving equity valuations a highly welcome fundamental cushion. Rounding out the top three is the growing geopolitical anxiety that capped the afternoon stock market gains. Crude oil benchmarks fluctuated wildly, hovering around $83 a barrel following a series of intense military exchanges between the U.S. and Iran. With fresh political rhetoric threatening harder strikes on Iranian infrastructure and a potential naval blockade, commodity traders are rapidly pricing in potential energy supply disruptions through the Strait of Hormuz, keeping the VIX alive and kicking. All right, let's step away from the macro picture and look at the individual stock sandbox. It's time for our daily leaderboard, where we separate today's absolute market rock stars from the unfortunate equities that got thoroughly wrecked by the closing bell. Leading the charge on the gainer board, Lucid Group LCID sparked a highly energized rally as short covering and speculative EV buying picked up massive steam. Right behind it, Chiron Capital, CHRN, saw explosive volume push its share price into absolute orbit. Semiconductor testing favorite Aehr Test Systems, AEHR, also joined the winner's circle, surging higher as chip stocks caught an aggressive bid following the morning's cooling wholesale data. Finally, fintech giant PayPal, PYPL, kept its strong upward momentum alive, benefiting from positive payment volume revisions and steady institutional accumulation. Now for the painful side of the ledger. Cellectar Biosciences, CELC, faced heavy distribution today, crashing hard as investors fled speculative biotech plays. Industrial giant Pentair, PNR, also hit a major roadblock, sliding downwards after a prominent analyst downgrade highlighted softening global margin trends. Universal Technical Institute, UTI, completely flunked today's test, losing significant ground as volume-heavy selling wiped out its short-term moving averages. And rounding out the losers, Applied Optoelectronics, AAOI, got absolutely hammered, continuing a painful corrective phase as optical networking stocks faced localized profit-taking. Shifting our focus over to the technical charts, the S&P 500 ETF, ticker SPY, put on a clinic in structural resilience today. SPY managed to successfully defend its critical short-term support level right around the 540 mark, keeping the broader bullish trend intact. On the upside, immediate overhead resistance sits at 548, a level the bulls briefly tested before backing off into the close. A clean daily breakout above 548 opens the door for an extension toward 550, while breaking below 540 risks a fast drop toward the 50-day moving average at 532. The tech-heavy NASDAQ 100 ETF QQQ showed excellent relative strength during today's session, confirming that institutional buyers are still eager to buy the dip in mega-cap tech. QQQ successfully established a firm intraday support floor at the 475 level. As long as the bulls maintain control of 475, the path of least resistance points back up toward the heavy supply zone at 485. Reclaiming 485 triggers a massive short squeeze, while failing risks exposing deeper support down at 466. Turning to the small caps, the Russell 2000 ETF, ticker IWM, continues to be the frustrating laggard of this macroeconomic environment. IWM spent the vast majority of the day drifting sideways, finding reliable baseline support at 208, but repeatedly hitting an invisible brick wall of resistance at 214. Small caps remain highly sensitive to regional banking liquidity and interest rate expectations, meaning IWM needs to decisively reclaim 214 before we see a sustainable breakout. The crypto space caught a massive second wind today. Bitcoin, BTC, executed a beautiful intraday rally, gaining over 4% to vault back over the critical $65,000 psychological threshold. This rally was heavily catalyzed by the cooler-than-expected U.S. wholesale inflation print, which breathed new life into risk assets across the board. From a technical standpoint, $65,000 now flips into key near-term support, with the next major objective for the bulls sitting at the heavy 67,500 resistance block. Not to be outdone, Ethereum ETH rode Bitcoin's coattails higher, tracking a solid daily gain and looking ready to break out of its recent consolidation pattern. Ethereum successfully defended its core support zone at $3,350 and is currently eyeing immediate overhead resistance at $3,500. Crypto traders are watching this level intently. A decisive break above $3,500 could easily trigger a wave of retail FOMO buying, targeting the next macro liquidity pool up near $3,680. The broader altcoin market experienced a highly refreshing risk-on bounce today. With Bitcoin dominance stabilizing, capital quickly rotated down the risk curve, lifting high beta layer 1 protocols and popular decentralized finance assets. Total crypto market capitalization expanded visibly, indicating that retail and institutional traders alike are willing to step back out into the crypto risk spectrum as long as macroeconomic bond yields remain contained. Wrapping it all up, the overall market sentiment heading into tomorrow's trading session is one of cautious optimism. The healthy combination of strong bank earnings and cooling wholesale inflation data gives the bulls a clear fundamental edge. However, the ever-present threat of sudden geopolitical headlines out of the Middle East means you must keep your position sizes rational and your risk management tight. Keep a very close eye on tomorrow's upcoming weekly jobless claims and retail sales updates for the next major clues on economic health. If you found this recap valuable and want to stay ahead of Wall Street every single day, smash that like button, hit subscribe, and turn on notifications so you never miss an update. Drop a comment below with your favorite stock pick for tomorrow.